Hello, welcome to the Mortgage Loan Officer Podcast, and we are going to talk processing once again. There's some things that loan officers should really consider before they feel like they're prepared to get a file moving into the processing arena. And that's what we're going to talk about right here, right now on the Mortgage Loan Officer Podcast, brought to you by the Mortgage Marketing Animals. I'm your host, Frank Garay, and I'm here with Tom Van Dusen once again with the Processing Center. Tom, how's it going, my friend?
Good. Thanks for having us back again.
You betcha. We had a great response to the last show we did with you, and as fitting, right? It was a good show. You brought us a lot of great information, and you've got a really great company that people can plug into, the Processing Center. So you guys, I'll just get it right out in front. theprocessingcenter.com. It's pretty easy to find. .net. Sorry, theprocessingcenter.net. Thanks for the catch. Tom, of course, is the owner, CEO of the company. We wanted to talk about a couple of things today, guys, because Tom and I talk, and he's like, man, there's a few things that if loan officers would take just a little bit more care before they feel like they're ready to plug a loan into the processing arena, it might make things go just a lot smoother for everybody. And you've got three things for us to consider as originators to help us just, hey, look, man, everybody wants things to be smooth, right, Tom? I mean, I'd like everything to be nice and smooth. I don't want to have to deal with a call or deal with this or deal with that when I thought I had this sort of thought through, or taken care of. So what would you say are the top three things that you think a loan originator should pay the closest attention to before he actually is ready to get that file into processing?
Well, yeah, there's a couple of aspects. The handoff, the main handoff is pretty important. Making sure that you do your best on filling in the little meticulous blanks. Something that always will catch us up is, oh, you didn't have the date of birth on the application. We can't find the date of birth on it. Now we can't disclose the loan. So these little tiny things. So
just to stop right there, just real detailed loan origination, right? Yeah. So very, very detailed application if possible. And I think we all know that as originators, we should be doing that. But good point. Even something as little as a birthday can stop a disclosure from going out. Now we got to go dig it up, right?
Yeah. The more detailed, the better. And, it's just going to make for a smoother transition. You shouldn't have a processor that's going to say, hey, I can't move forward until you fill this out, but if we have to go fishing for the information, looking for that stuff within the documentation and not having it, then having to put it aside, call a borrower, and then, wait for them to call you back. It could delay you an hour, 2 hours a day or something like that. So
what else on the initial handoff?
Let's see. Just so I would say on the paperwork, making sure, for example, if you send the file over there and a borrower says, hey, I'm not going to have updated pay stubs until next week, or something within the file that you have the knowledge, you've been discussing this with the borrower for a week, 2 weeks, 3 weeks, or whatever, and have been cultivating it. The processor's seeing it for the first time.
Yeah.
So when they see it, they're only as good as the documentation was given to them, or that you have briefed them on what the borrower's point of view is. So to bring that processor in line with, for example, it's a cash out deal and he really needs to have $50,000 cash out for this. Your 1003 may not be completed, or you may say, hey, this is a cash out deal at 80%. And when all's said and done, we're disclosing it and we're short at 33,000.
Yeah.
So there's some nuances and just shoring up the difference of getting that customer experience, what the borrower is expecting to see, and you're meeting those expectations.
Yeah, I think I like what you said. I think you said at the briefing, like we have to almost have a little sort of write up, right? Like it'd be nice to do that. Like, here's the deal. Here's what's going on. Here's what we're expecting. Here's what, oh, by the way, pay stubs won't be ready for a week or whatever the case may be. Just like a little synopsis, if you can. Is that what you're basically saying?
Yeah. I think that kind of leads into like the second item as well too, is the handoff and the structure of the loan. We have a really good form where it's we don't require the form to be filled out, but it's really good that you actually do it. And we try to keep it as condensed as possible, where, you know, it hits all the nail on the head. What rate did you want to disclose?
Mm,
What was the yield spread you were looking at that particular rate?
mm,
Is it cash out? Is it rate term? You know,
mm,
what kind of property is it? You know, sometimes it may look like an SFR, but there's HOA. It's a PUD or something of that
mm,
nature.
mm,
You know, the more
mm.
information that you're giving the processor, the less things are going to come up and surprise us along the way.
Right.
Yeah, that definitely leads for a smoother transition is the loan structure of it. And part of that is possibly a little narrative at the bottom, you know, a few pointers. Hey, the borrower's going out of town on Friday. We need to have these disclosures out, you know, that latest by tomorrow, that type of thing.
You know, you mentioned that you guys have a form, and
Mhm.
you then said, you know, you don't necessarily have to fill it out, but I tell you, the reason that forms exist is for this very reason,
Yeah,
right? This is
yeah,
why we have the form,
right,
because
right.
many times we're going down a path and we're 3/4 of the way through it, and then we realize, oh, you know, it's a PUD, you know what I
Yeah,
mean? Or whatever the case may be. Oh, now that opens up a whole new ball of wax. And we didn't know that. The only reason we know it now is we got the appraisal back, right?
yeah.
And now we know. Okay. So, but you knew the whole time, loan officer, what it was, but how are we supposed to know? You know,
Yeah.
unless you tell us. So
I like our form. Our form, I mean, I've been doing this for 32 years, so of course it's have this cultivation effect. But I've
right.
got to a point where there's these common denominators of things that stop us dead in the tracks.
Yeah.
And yeah, it's a little bit of a pain in the butt to fill out, but it's important. Like, you know, how often do passwords change? So if you
Mm,
give me a deal at 4:30 and I need to disclose that deal and I get to it by 7 that night, you're not available and the password doesn't work. Now it goes over till tomorrow, you know, and I may be
yeah.
doing this or that, and it could delay us on that. So
Yeah.
we really have it down to about 15 items. You know, a good processor should have a good transfer system over there. That's not too meticulous. I've seen 3 or 4 page ones that are pretty crazy, so I can see where
Right.
people get frustrated with that. But
Yeah.
yeah, like you said, the form's there for a reason, and if you utilize that form, it's just gonna make a smoother transition.
You know, the old saying, an ounce of prevention, right?
Yeah,
It's
yeah,
a little bit of effort in the beginning, you
yeah.
know, just to, you know, solves a whole lot of problems at the end. And
Hmm.
so good. So all right, well, we've got, you know, our handoff, you know, that we're talking about, making sure that first of all, obviously very, very detailed information into the loan application is certainly appreciated.
Yeah,
Then a briefing, of course, a little synopsis of what's going on, and that does tie into the structure side of things as well. Hopefully you're working with a processor in your own company, or your company has some sort of checklist form that you're going through before before it winds up in the processor's hands. If you work with Tom's company, obviously they've got that form to make sure that, you know, we're checking all, even as little things like a password, you know, can slow something down and you can have a problem. You know, those disclosures, they don't kid around on that stuff. You got to have
yeah,
that done, you know.
right.
So, you know, this is all really good stuff. What else? What you had a last piece for us that you thought was pretty important.
Yeah, it's the borrower's point of view. And I would say about 80% of our clients like us to take the bull by the horns. So if
Mm,
we get carte blanche, calling the borrower, asking for this, asking for that. Some are like, hey, you know, we'll do the borrower communication, you do X, Y, and Z, and we can tailor our relationship with that loan officer for it. But for the most part, it's just kind of like, here's a loan, let me know when it funds, give you my check. And we can
mm,
provide that type of service for them.
mm,
But it's that borrower point of view that we kind of need to know. Again, like I mentioned before, the loan officers has been dealing with the borrower for, you know, a week, 2 weeks, 3 weeks, or whatever. They've had a lot of communication, a lot of things have been said. So, you know, a few pointers, just, you know, all borrowers are not created equal. You may have a really grumpy old guy. You
yeah.
may have a sweet old lady who may need, you know, the handheld. You may have just a really nice guy and he's just good for anything. That type of
Mm,
feedback's great for us
mm,
because we could set our communication level up and predict something like
mm,
that, you know,
mm.
where we know, hey, he hasn't responded in 2 days and it's the grumpy old guy. You know, maybe the loan officer needs to make that phone call and follow up with something like that.
Yeah.
And then, you know, and just anything that comes to mind from that borrower point of view, like I mentioned before, how much cash is he looking for if he's doing a cash out refinance,
Mm,
or if it's a purchase transaction? Make sure the down payment doesn't exceed 100,000. That's all he can get, and he can't get another gift.
mm,
Gives us kind of like a goal and a structure of which, when we're disclosing or we get the approval and find out there's reserves needed, we can troubleshoot before we blow the deal with
mm,
the borrower. We're
mm,
handling that stuff internally.
mm,
So it kind of makes for a smoother transaction if you have a really good processor who can really structure a deal and change things and can think with, all the nuances of a loan. And then by the time it's presented to the borrower, maybe we're not asking for 20 items, maybe we're only asking for 2 items because everything else had been handled in the communication prior.
yeah, I love that. I love that phrase, that from the borrower point of view.
Right.
And I think that's a really cool way when you're preparing your little synopsis or your briefings or your explanations to really present this to the processor from the borrower's point of view. From the borrower's point of view, this is what they believe they're getting. This is what they're expecting. This is the rate that they've been quoted. This is the cash out amount that they're thinking. This is, so that's really, really a great way to look at it, because now as a processor, I can say, well, this is the borrower point of view, and I'm looking at this file, and this is not fitting the borrower's point of view
Yeah.
right
Yeah.
now. So we have to have that discussion. We have to talk about that.
Well, the
So,
loan's not going to get done without the borrower.
right.
So the smoother we make the experience for the borrower, the better. So we'll get the loan done one way or another. But
Mm,
when the loan funds, is that borrower really upset because he had to send things 4 times? He
yes.
already told the loan officer 3 times, blah, 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 we didn't know, or he was out of town and we missed a deadline, or this and this and that and that. So at the end of the day, that loan usually will fund because we'll push and push and push and push. But where will the borrower be at the end of that experience? Is it
Yeah.
like exactly what he expected, or it wasn't what he expected? So we
Yeah.
would like to have you know, definitely the borrower be happy, because that's where your referrals are going to come from, or your refinances in 6 months when the rates drop and so
Mm,
forth. So
mm.
yeah, it's really important for us because we know our bread and butter is going to be that repeat business coming in, as it is with the loan officer. We have the same goal in mind.
Yeah. For me, my takeaway from this really is detail up front, of course.
Yeah.
Right. And then I like what you're saying is that, as the originator on the file, depending on the nature of the file, if it's a purchase, especially if it's a purchase, in my originations, I originate, right? I talk to buyer. Sometimes I'm having multiple conversations with a buyer. We're
Yeah.
we're we're brainstorming multiple scenarios. We're looking at different loan products and programs and pricing and interest rates and payments and and all that stuff. And so it would be really wise of us as originators to make sure that the clear, concise story is laid out and the processor understands what we're thinking and what the borrower point of view is on the transaction. And another clutch thing, man, is like, you are so right. The matter of things like, use the example of the current pay stub won't be available for another week or so. Well, good to know as a processor. So I'm not calling them now saying, hey, where's that pay stub? Then you get that,
I
I
already
told
told him
him, I
that. Yeah,
told
that's like,
him it's next week, and even worse, maybe they don't even respond to the processor. They just call you as the originator and go, they're asking me for the pay stub. And I told you, who wants that call? I
right.
don't want that call. Nobody wants that call. You know what I mean? So, man, I really like the approach of the borrower point of view and getting that synopsis laid out, being very detailed and having a clear synopsis, briefing, whatever you want to call it, for the processor, letting them know the point of view. Now, on the other hand, you got to work with a processor that's going to read it. You know, you
Yeah.
know what I mean? And
Yeah.
slow down, pay attention, read what's being said, maybe make notes in the calendar, however they do it, so that they're in line and in tune and understand. Or if there is some question, obviously being able to reach out, to the originator quickly before we get going into, down this path and say, hey, what did you mean by this? What did you mean by that?
Yeah. Yeah. I mean, it has a lot to do with both the loan officer and their organization and the processor and their organization. If you have a newer processor who is maybe a little green behind the ears, and maybe they're swimming a little bit, but you got a really good processor who can absorb that information and can work with that information. And let's face it, there's a lot of data to be transmitted within that first day of all of the paperwork, all of the structure, all of the, and a lot of stuff happens within a day or 2 days. To have that information available 3 weeks later on, like, don't forget, Max, he wants at least 50,000 cash out, or don't forget, we need to raise the loan amount, or don't forget this, there's a seller concession that's not on the so-and-so. So to have all that information organized where that processor can get at it, so it's a symbiotic relationship where both of them really need to be organized. And that's why, the relationship would be key to, find a processor that fits the way that you do business and that you're comfortable with. They're out there. So you would be able to, just get that one guy that is super organized and can, make your dreams come true, make the borrower's dreams come true.
Yeah. One of the biggest ones is, and I think a lot of originators miss this, Tom, and I know if they're working with a company like yours, that this can be easily resolved, is especially on a purchase transaction, we got to understand, right, that there are 3 dates on a contract that apply to us.
Yeah.
On that, well, not apply to us, that we are heavily involved with. Now, I know when it comes to the purchase agreement, me as the loan officer, I didn't sign their purchase agreement. I'm not part of their purchase agreement, right?
Right.
But as the originator, if I would like to get more business out of these real estate agents, there are 3 dates in particular that revolve around me. And so I need to work toward those dates and understand those dates are out there. And number 1 is the appraisal contingency release, right? Number 2 is the loan approval contingency release, right? And then, of course, the close of escrow, right?
Yeah.
The closing date. These are the 3 dates that, whether you like it or not, as an originator, you're involved in. And you're deep. And you guys need to understand this too, that these real estate agents, their lives in a transaction revolve around these dates. They're looking at these dates, like, because if they don't meet the appraisal contingency, they're out of contract.
Right.
They're out of contract. And for us on the loan side, we, sometimes originally, oh, well, it'll be in tomorrow. It'll be in the next day. Okay, that's fine. But they needed to know that a day ago, 2 days ago, so that they could now adjust their contract, because they're in contract. So I would really make a strong point for the originators listening, that when you're handing this off to your processing team, you make sure they're very aware on a purchase deal of what those contingency dates are. And if there's any indication that we might not be able to meet them, we need to know well in advance, right? Days in advance, so that information can be conveyed to the real estate partners so that they can make their adjustments, right? Most of the time, realtors can go, oh, you can't meet the appraisal contingency because, it's just backed up, or whatever the case may be. Fine. What should we do? Let's fix it, but let it be proactive about it, not reactive about it.
Right.
And that requires that we know what the dang dates are, right? And that our processing team knows what the dates are, so they can flag us, if something's going on. Wouldn't you agree with all that, Tom?
I would totally agree. Nobody wants to wake up in the morning to a notice to perform.
Right.
So, and we have, like, it's funny, the 3 dates that you say, we have those on a purchase transaction. Our system is bink, 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 4 or 5 days before that date is up,
Really? Awesome.
Yeah. So, and we'll make that communication out to the loan officer, where it's like, it's going to be on Friday, but our contingency up Thursday. Maybe we should do a conference call with that realtor, or do you want me to call the realtor? And I'll let them know. So, and in most cases, they're going to be okay. It's when they don't hear from anybody.
Right.
The day's come and gone. And, the damage is done once that notice to perform is, and not even the notice to perform, but just putting that bad feather in your cap with that.
It's what it is.
That realtor, it's just like they can't meet the dates. Yeah, they did pull it off, and we did get it funded, but I didn't like the, and you don't get any more business from the guy.
Yeah,
as opposed to smooth communication, meeting your deadlines, maybe being late, but there's some back communication and so forth, and I mean, let's face it, they don't always meet their deadlines. Sellers are always, oh, well, we can't close today because of so and so. But if we're ready to go, I mean, that just looks like amazing to everybody.
Exactly. It's in point well taken. It's not the end of the world if you can't meet a contingency date for something. Something happened and you can't meet it. You need a little bit more time. 99 times out of 100, the real estate agents, everybody in the transaction is going to be okay with it as long as we know, not the day before, right? Like, can I have a few days notice that, like start giving me the heads up that, hey, might have trouble on this date, might need to back that up. They're totally appreciative of that. They
Right.
totally get it's when you're can't be found, you're not even thinking of those dates, or your processing team's not even thinking of those dates. And
Yeah.
suddenly it's the day before and people are frantically calling you saying, hey, we got to release this tomorrow. Is it even, are we good? Or, and that's where you can get that bad taste, and, they can get a bad taste in their mouth for you, even if you close it on time, right?
Yeah.
Just like you said, but you weren't on it. You didn't count yourself as being part of their transaction.
It kind of rolls back to my third point, where that handoff of the point of view, in a purchase transaction, not only a borrower point of view, but a realtor point of view, especially if you have a relationship with that realtor. Hey, this is my guy that I get 40% of my business from. For us, we put a big gold sticker on that file, and it's like, okay, this is the butt that we're going to kiss, and this means more business for us. This means we look good to our client, which is the loan officer, and the loan officer gets more business because
That's right. That's right.
So to know that, and then so if we knew that up front, the communication would flow better, where we're calling the realtor, or we're advising the realtor, or hey, the appraisal's in 2 days early. Well, shoot, I'll send a copy of it over to the realtor, or at least alert him that it's in.
Right.
But
yeah, good stuff, man. Good stuff. Awesome stuff. Tom Van Dusen over at the Processing Center. Theprocessingcenter.net would be where to go. His team is phenomenal. Obviously, they actually understand that there's 3 very important dates on a purchase agreement. And they make note of that.
But you're right.
And they work toward it. A lot of originators don't, brother. A lot of companies they're not even concerned. It's not even a thought process until a pissed off agent is raising their hand saying, what's going on? Right.
Yeah.
And that nobody wants to be there. I mean,
yeah,
I hope
5 o'clock rings. It's like Fred Flintstone. They pull that whistle. He's sliding down the dinosaur tail, and they're out of there. And it says, but a good processor would be like, I'll stay late, or it's 4 o'clock. I'm going to fight to get that answer before 5 o'clock because I have to meet that contingency. That date is there. So super important.
Can't believe you used the Flintstone reference with pulling the horn and sliding down the dinosaur tail. That was pretty good. Showing your age there, buddy boy. That just brought back a really neat memory, just to tell you the truth. So that was kind of cool, the Flintstones. All right. Well, great stuff. Guys, if you want to reach out to Tom and check out his company, just go to theprocessingcenter.net, theprocessingcenter.net. They can engage.
I'll correct you on that if I can. It's
I'm screwing it all up. What is it?
It's okay. Processing Center was not available way back when I got my domain, surprisingly enough. It's processcenter.net.
Process Center, not processing.
Correct. Yep.
Process
Center.
I'm so sorry, man. Well, hopefully I'll listen to the bitter end. Processcenter.net, processcenter.net. And now if you're watching us or listening to us if you're on YouTube, obviously there'd be a link down in the description. But if you're listening to us on the Loan Officer Podcast Network with Mortgage Marketing Animals, there will be a link down below that you can click. And hopefully if you're on iTunes, Spotify, it's not the Process Center, or is it the Process Center?
Nope, just Process Center.
Processcenter.net. Processcenter.net. Talk to Tom over there and his team. They'll take care of you. Good stuff to be aware of. Even if you're not using Tom's company, this is the type of stuff you need to be thinking of when you're handing off your file into processing as an originator, to make sure you have a smooth and flawless transaction, right? That's what we're after. And so with that, we'll go ahead and buzz on out of here. I'll also remind you guys, if you have not joined us yet on the Loan Officer Breakfast Club, please do. I host it every Monday through Thursday, 8:30 a.m. to 9 a.m. Eastern time. It's a live, completely free Zoom coaching call. We have about, gosh, Tom, we're averaging about 500 people a day on the coaching call. Yeah. And it's become a really just super cool community. and it's free, and why not? You know what I mean? And kind of introduces people to the mortgage marketing animals culture, you know what I mean? Which is a very cool culture. And so I really encourage you guys, come to the Loan Officer Breakfast Club. To get registered is very easy. Just go to loanofficerbreakfastclub.com, loanofficerbreakfastclub.com. I didn't screw up my website, Tom. Mine I got right. Sorry about screwing up yours. But loanofficerbreakfastclub.com. Join us there. And with that, we'll get on out of here. We'll see you here next week on the Mortgage Loan Officer Podcast. Thanks, Tom. Appreciate you, brother.